My pleasure to introduce Joan Williams with United Tax Service and let you know that she's one of the excellent leaders in that field and been doing it for over 20 years. So we're very fortunate to have her here. Without further ado, I'm going to turn it over to you, Joan.
Okay, so I wanted to make sure everyone is not doing their own taxes, and a lot of what I'm going to cover in the first half is probably going to be review, but there might be something that's more current or maybe a little twist on something you already feel like you know. So I kind of like to run through just some basics on taxes for self-employed, because as an investor you are self-employed. So I think all of us have LLCs, right? We all have entities. You don't just do it all by yourself. Snoopy's one of my favorite people. So we'd all wish we could get off the mailing list from the IRS, but we know that's not going to happen. So a little bit about my history. I come from a long line of entrepreneurs on both sides, and so it was natural for me to try to do something in addition to whatever job I had. And my first job as a bank teller right out of high school, a friend of mine and I were making stuff to sell at the swap meet, and that's a business. And I treated it like a business, and I reported it on a Schedule C and showed a loss, because you always lose money the first year. And the IRS audited me. I was 19. My first tax return, I did my own. My dad said, here, took me to the post office, we got the forms, read the instructions, not a problem. Yeah, so I didn't know how to defend that. And I just said, I'll never let that happen again. And fast forward, have always had some kind of a side hustle or something, and was talking to some friends, and they said, wow, you know a lot about taxes, because I've been doing my own taxes all this time. So that's kind of how I started doing taxes for a living 20 years ago, and I formed United Tax Service in 2009. I want to make sure everybody was aware taxes are so much a part of our life, and we try not to think about it, but you pay more out in taxes than you do for your mortgage or your rent, your car payments, your health, and your meals combined. And tax freedom day is usually around filing day. Isn't that interesting how that kind of works? I made red the things that I want to focus on as far as what to track. So when you see red, that's like, oh, I need to track that. So there's you can have a strategy about your taxes if you want to save money on taxes, and everybody wants to save money on taxes. So there's all kinds of ways to do that. We all know that there's different structures for businesses. I'm sure everybody in the room has experience with LLCs, maybe C Corps, S Corps, and that kind of thing. I'm still a sole proprietorship because that just works for me. But there's different formats, and the blue ones are the ones that we're going to focus on in the second half when I talk about that business ownership report that everybody has to do, and I know everyone wants to know about that. When you are reporting your expenses, you want to treat it like a business and look like a business, and the way to do that is to show that you are in business to make money. One of the best ways to do that is to have a separate bank account for each business. If you have different entities, I know a lot of investors have a separate bank account for each property that they're managing. It just makes the bookkeeping a whole lot easier. You're going to have the same amount of bookkeeping, but wouldn't it be better to have it be easy, right? So I wanted to ask if any of you have a set way of tracking your properties and your expenses on your properties. You've got some system, right? I figured you might live. So then you just give your report to the accountant and he does the taxes.
No, I just put a bookkeeper in place.
Okay.
So I enter the payments as they come in.
Okay.
Undeposited funds, and she does whatever her magic is.
Okay.
And
So you have
separate
bank
accounts
accounts
for the shopping center, separate one for the industrial building.
Okay.
And I have 2 trust accounts set up because I
There you
had
go.
clients in the past, and rather than close them and have to reopen them, I just left money in.
There you go. Excellent. That is a really good way to do it. And I figure most of everyone here in the room have been around long enough to know how important it is to do that. So, so I wanted to just kind of run through the first part about just taxes in general, and so we can get to the part that everybody wants to know about. There are certain things that you can deduct And I wanna make sure everyone knows that you can write off parts of your home, your expense for your home office, and you can pay your spouse, and you can pay your kids up to $13,850 in 2024, and that becomes income for them, and they're gonna pay a lower tax rate than you would. So that's a good way to shove your profits into the family. You can put it towards the college kids, college education, right?
Our accountant has the LLC paying minimum and then transfers the profit to the 4 shareholders.
There you go. There you go.
Because we pay a lower tax rate than the LLC.
Yes, yes. So it's not an S corp then? It doesn't pass through to you?
It's
Yeah,
an
you pay the
LLC.
profits out. Yeah.
I don't know
Yeah.
other than that, yeah.
There you go. Yeah, LLCs can be S corps, but they don't have to be. And that's a tax designation. It's just how we report the taxes. We call it pass through. Schedule A is where your personal expenses go, your mortgage that you pay for your own home. If you're Airbnb-ing your mountain cabin or something, I wouldn't put it on Schedule A. I would put that on Schedule E, like any other rental. But just want to make sure you know that your medical, it's anything of your medical expenses over 7% of your gross income, your adjusted gross income. So it'd have to be huge for it to even count. But it's good to know what your expenses are, and if you have something major like a broken leg or heart surgery, something like that, then you might have enough to qualify. SALT is the state and local taxes. And then for Schedule C, travel medical for your family. If you have medical coverage that you can pay for it from your business. It has to be set up that way. But that makes it a tax deductible expense, and you don't have to worry about putting it on Schedule A. So you might not have enough for Schedule A. And paying your spouse and your kids. Schedule E is where your investments go. So rentals is really where that goes. And so you're gonna get, you might have a Schedule K from the LLCs or the corporations.
K1.
I said Schedule C, K1. K1 is kind of like a W-2, right? You probably have all gotten them, so you know. And so those expenses go for that property on your Schedule E. So you can put 3 properties on one Schedule E. If you have more, it's okay, you just do more Schedule E's. And you can also do your home office against that too. So just making sure you know about all the things you can write off against that income from your investment properties. Travel deductions, you can write off, we all know, your flights and your Ubers and what else? Paying the concierge, what do you call the guy at the sky cap at the airport? But also you can go to the dry cleaners either before or after your trip and write off all of that. And
Really? They won't let me deduct the dry cleaning of my suits that I wear.
Yeah, they do. Well, you can. If it's within 7 days before or after your trip, you can write off.
Trip.
Yeah, of a travel trip, yes.
At a business meeting.
Well, I do it. I have a category, wardrobe and laundry.
Okay.
If you're a chef and you've got to wash your cook shirt that you wear, if you have logoed wardrobe, that's tax deductible for sure. Street clothes, they don't like you to do that. But your laundry, what else? There's per diem. So if you do travel, you can write off up to 150 cents. It depends on the county. So if you've got a hotel bill, that's one thing. But maybe you didn't keep your receipts, or you stayed with family, and you didn't have that expense, you can still write off a per diem amount for your travels. Okay, so I kind of want to give you some extra little bits that you might not know. For your car, there's 2 ways to write off your car. One is miles. For 2024, it's 67 cents a mile. So 100 miles is $67? No, $6.70. 100 miles. 10,000 miles would be 670 dollars. So it's significant. And the IRS, when they see Schedule E and they see home office, They look at miles, they look at meals, and they look at advertising. They know advertising costs money. So you could put a magnet on your car and write off more of your miles because now you're advertising everywhere you go. So just little things that you can do to add to your expenses. You spent the money. So we just want to let Uncle Sam know all the things that we can legitimately claim. And so there's miles or else everything else, every dime. So it's the lease payments, tune-ups, tires, windshield wipers, gasoline, insurance, parking, and it's all of the lease payments, or if you have car payments, it's the interest only. So look at your December statement. It says how much you paid for the year for interest on your car loan. And you can do whichever is better. So I always suggest adding them both up. And something real quick on your miles. If you don't track your miles, an easy way to do an estimate, estimates are allowed by the IRS. Just want to be able to show how you got the number. So you can take your mechanics receipts. They're required by law to put the odometer reading on the receipt. So if you throw them all in the glove box, take them out at the end of the year and add up the miles from one to the next, from the earliest to the latest. Figure out what your average per month is and take that for your miles. You can do that. And then if you've got receipts for all your repairs and everything, and see which one is better, and that's the one that you claim, okay?
An average month, can you take the full average?
Yeah.
Not a percentage of it.
No, you're right. You have to have your total miles, and then how much of that is business. Most people feel like they, especially like in this room, you don't go anywhere and not talk about what you do, right?
Right.
So you could say 100%, but I wouldn't. So I usually will say 85% for myself, but I have two businesses, so I split it. So that's yeah, you do have to have your business miles, but you're not gonna know that if you don't have a log or take an average, a percentage of your average, just as long as you make notes in your file of how you got that number.
Did you intimate that if you put magnets on your car, your automobile expenses are totally written off because it's advertising?
You could do it that way, yeah. I
What
don't
were you
know if
intimating?
that's.
What were you intimating when you said that?
Yeah, I did. You could do it that way. I know people who do that. I don't. I just put the cost of the magnets on advertising. It kind of depends because some businesses, like as an investor, you don't really advertise, right? You kind of network, and that's advertising expense. But you know, like your breakfast today and your membership and all that.
But we're all real estate brokers. or
Right, brokers,
realtors.
yeah. So you're gonna get just as good of, I was gonna say mileage, you're gonna get just as much for your investment, your cost, by claiming the vehicle by miles or actual expenses. And if you don't have that component in your tax return, the IRS is gonna go, wait a minute, you're in California, you're driving, you know, so they're gonna look for it. So I would keep doing it that way, but the magnets themselves can go on advertising. So,
Magnets are nothing.
yeah.
Well, my
yeah.
little electric car, since I'm a property manager, I have to go to the post office 6 days a week, pick up bills and whatever.
Yeah.
And so I write off all the mileage on my little
Miles.
electric car.
Absolutely.
And it's got not the sticker, it's permanently on the car.
Oh, yeah.
The lettering.
Right.
It cost $1,000. The accountant didn't do anything with it as far as taking
Oh, I
the deduction.
would have put that as advertising. Yeah, absolutely. Oops.
Yeah, I went back, I did that like 4 or 5 years ago.
Oh my.
Can you back up just for a second? I wondered about this question, if you're better off to lease or buy a vehicle. And go over that again, please.
The difference is when you're leasing, 100% of your payments is you can include in your deductions. If you are paying payments to the bank, then only the interest out of those total payments for the year.
Only the interest.
Only the interest instead of the whole lease payment. But remember, you still have to figure out how many miles and what the percentage of miles. So say you drove 60,000 miles and you're gonna say that 80% was business, That's 48,000 miles, but it's 80%. So you're gonna take all your expenses and you're gonna take 80% of all of your expenses. So that's the difference between leasing and purchasing. If you have a business truck, and you none of you do probably, but like if you're a cabinet maker and you use a truck to deliver and install cabinets, you can purchase the truck. There's a vehicular weight, I think it's 25,000 pounds, but whatever that truck costs, even if you finance it, you can write off the whole price tag the year that you bought it. So that's an additional vehicle expense that some people would qualify for.
It's not amortized over a period of time.
You can, but you know, if you had a big jump in revenue, you don't have to, but you can. They have that bonus depreciation, yeah, or it's anything in between. You can say half this year because you bought it this year and then amortize the rest. You can do it that way too. Yeah.
So when do your business miles start?
January 1.
No, when you get in your car, when you're working from home. So you gotta go home
Good
office.
point, really good question. What people will say is, I worked from home before I left the house. I made some phone calls, I got on the computer, my day started, and then I got in the car, so then it starts from home. And I'm gonna tell you a little bit about an app that you can use for tracking your miles. Does it automatically, so you don't have to think about it. But it used to be, you had those little books that you got at Pep Boys, and you every morning you would say, this is the odometer, and then at the end of the day, you'd say, this is the new number of miles, and I figured this much was for business, or however you did it. But now it's can be all automatic on your phone. So.
One more question, please, on the car.
Sure.
Is there a threshold for weight and cost of a car that affects the deductibility?
That affects the deductibility?
Of
No.
no.
Not
Okay.
at all. You can drive, that's why you see real estate people in the good days driving Ferraris that are
Yes,
leased,
fancy cars.
because
yeah.
they can write off the whole lease amount, right? So, yeah.
Because there's some information on the internet talking about the weight of a car in excess of such and such,
Right.
and the cost being above a certain amount,
Right.
you can deduct the whole thing.
Right,
so.
that's what I meant for, yeah. I think it's 25,000 pounds.
That would be a
gross
truck,
vehicular
probably.
weight.
Not
It
only
has to
could
be a
an
big,
electric one, too.
I'm looking at
All
cars
the way
right
to
now.
selling those.
Personal
Those are
cars,
batteries.
family cars are 4,000 to 6,000 pounds.
Yeah.
So it'd have to be a big, heavy work truck with the work boxes
Yeah.
on it and all that. Yeah, 25,000 I think is the,
So on the personal side, it's more of just lease versus buy.
right,
Yeah, okay.
right. Lease versus buy. Good questions, very good questions. See, and I took out a lot of that detail because I wasn't sure you would need. Okay, let's do, yeah, so that's automobile. Oh, here's your software, this app. It's been around for 20 years. That's
Yeah,
an
it
app.
works.
You can go to that website on your phone on the internet, and then download. You want to open your account first. Start your account. You enter your vehicle information and your starting odometer, and then you load the app, and it will use the GPS in your phone. So as soon as you're moving, it says, okay, you started at this address, and when you stop moving, you park your car, it stops. And those are segments, and you can go in and look at all the segments for that day and say, this was business, this was personal. Or you can say, this was this business, this was that business, this was the other business. You can do that too.
How long does it keep it on there for?
Till, well, they just keep it. You can log on the website and look at last year's. Yeah, so it tracks your miles, and you can, swipe left, swipe right, say which business it was or what client you saw. You can fill in that information. I suggested it to a client once. I said, next time you're watching movies with the family, everybody else is on their phone, right? You're doing business. You're swiping left and swiping right. But she said, I did that. She said, every Friday night I would do for the week, and it'd be done. And so at the end of the year, you can print out a report that says, for this business, you drove this many miles, and for business B, this many, and this was personal. And it's awesome to have all that done. You don't have to write anything down. You just point and click.
What's Hurdler cost?
It's $10 a month. First 7 days is free, $10, call it software, it's tax deductible, and it's a good way to go. But it's also, you can link your business account to Hurdler, and you can do the same thing. You can swipe left, swipe right. You can say what, each transaction, you can say what category it goes to. So at the end of the year, it's done. It's just like using QuickBooks, and you get your report and you give it to your tax person. Right?
And
Very cool.
There's no categories for monkey business.
My goodness. I had a client once that gave me a P&L, and one of the categories was scam. I said, what is this? Well, I got scammed for $1,000. That's an expense, isn't it? Let's put it somewhere else. Yeah, so that's
rich.
how to do that. Did you find? So, okay, we talked a little bit about the home office. So if you're in a house and you've got house payments, the interest, the real estate taxes, and utilities, just lights and gas, not water. I don't know, I guess they don't want you to shower before you sit down and work at home.
All the utilities, including trash.
Trash, yeah, water and trash.
Water, trash, gas,
Your
electricity.
Internet. Right.
They
Your
won't
gardener, your pool man, everything. Whatever it costs you to live in your home, not counting the
internet and landline.
Yes, yes. Yeah, it used to be you paid extra just for long distance, and that was tax deductible. But the landline, not so much. But does everybody still have landlines? Do you? A couple do. Yeah. They're not going to split hairs.
Yes, with an answering.
That shows me the
We
numbers.
used to pay for answering service, didn't we?
Yeah,
That would be
back in the
tax
day.
deductible too, yeah. And in fact, but I wouldn't even put that on the home office, because the home office takes a percentage, just like your business miles for your car. Your house is, say, 2,000 square feet, and you have one bedroom entirely dedicated to your business. You have filing cabinets and whatnot. But even if you don't, they used to say you have to have a whole room dedicated just to your business, no pictures of the cat, nothing. But they're a lot more lenient now. So you can have the kitchen table and a file cabinet and call that, plus the 30 inches for your chair, and call that your space. And I always suggest take a picture of your business, your home office, take a picture and throw it in your file, just in case they say, I don't know that you have a business, a home office. You can say, yeah, here it is. It's half of my kid's bedroom, whatever it is. Just don't mention it.
But I know they ask me questions about, do you see clients at your home? Because I guess that makes a difference whether you deduct
Sure.
the gardener or not.
Absolutely.
And if you see clients at home, then you can deduct the gardener as well, because of home appearance.
You can deduct, well, sure, I would deduct the gardener anyway.
Well, if you don't see clients at home, they said, no,
Then you
that's
should.
on you.
Well, you gotta look at it like you're paying the gardener so you can do business. You're paying the pool man so you don't have to do it, so you can do business.
So do you have to get into the W-9s with them?
For the gardener? That's a good question. No, I wouldn't think so. Because
Any of those services.
you're not paying them to work for you. That would be a W-9, right? They're to work for you in your business, right?
Right.
Like I have an assistant that if they came to my house, I wouldn't change the way I'm reporting anything, because I'm paying him to work for me in my business, right? But the gardener is just helping you keep up your house so that you don't have to do it, so you can work.
Right.
That's the difference. It's so much of with the IRS. It's yes, they follow the law, and sometimes I got one yesterday on the phone. I talk to the IRS all the time, and yesterday she said, I can't do that, and I have had other IRS agents do what I was asking. So some just say, no, not gonna do it. Others go, I understand what you really need this for, so I'll help you. So, just like anywhere in the world, they're all human beings, and they all do their job, and some have more training than others, some have more experience than others, some understand it's not always the letter of the law, it's the intent. So, if the IRS is auditing you, they're gonna look at the home office expense because it's part of your business expenses. So you don't want to exaggerate your expenses, but if they're in line with what would be normal for your situation, then you shouldn't have any problem with it.
I take the room that's my office, and I get that percentage of the house and find out what it is, then I apply that also to the utilities.
Yes,
Right?
yes,
Okay.
yes. Whatever it costs to have that home. You had a question?
Yeah, I have a friend that during COVID, they weren't going to their office, right? So then they leased.
They leased part of their house to their business?
Yes.
Yes, you can do that.
And
Yeah.
then but then they charged
Uh-huh.
a big amount.
Yes, and it's all tax deductible.
Yeah,
Yeah, you
so
can do that.
I'm
If-
doing that.
Yes, good for you. You can do that. You can have board meetings in your home once a month and charge rent for the use of your dining table for your board meetings and pay $1,000 every time. You can do it 14 times a year, and that's tax deductible for your business, and it does not have to be reported as income personally.
Even if
You
you're
can
not-
pay yourself rent
No, all the meetings
for
at my
your
house.
board meetings in your home.
Is that the August law?
I don't know what it's called, I just know you can do it.
What do they come under? Like, what expense category would it be?
It's rent for space, yeah, space rent,
Wow,
yeah, yeah.
that's brilliant.
I'm so glad I could be here today to help you guys.
That's a big thing.
That's a good one, yeah, that's a really good one.
I had
Yeah.
a question on that one.
Okay,
So
Yes.
on that one, because I didn't know you could do it. So would it be market rent for that
It's-
type of
it's
for
office
space?
space.
Okay.
It's office space. There's, on Schedule C, there's 2 lines for rent. One is for equipment, like vehicles, and the other is for space, like storage units and office space.
Okay.
Right?
And
So
it would
that's
be
where it
me paying my
You pay
basically
yourself?
my trust.
You write a check
Okay.
from your business to you, and it's not tax deductible, it's not income.
Wow.
Yeah, yeah. IRS, I took out that slide to try to save time, but you know, all these, IRS started by Congress saying, we need a way to collect from everybody because so many people had moved during the Industrial Revolution. They moved from their farms where they were used to paying taxes once a year based on their crop, right? But everyone moved into the cities and started working and buying washing machines and cars and stuff. And they got their check from their boss and no one was saving to pay their taxes. And so tax revenue went down, and so Congress said, you know, we need to figure out a way to do that, and that's how W-2s came to be. So, and then of course they added all the other, Social Security and Medicare and all that. So, it's so funny because people will come in and sit down the first time and they'll say, I don't want to pay any taxes. But they have a W-2. You've been paying taxes all year, right? So I'm just going to try to help you get some of it back. And then if you haven't been working in a W-2 job like most in here, I always recommend when you have income, revenue, not profit, income, set aside 10 to 15% in a savings account just to pay your taxes. And hopefully you won't need it, but whatever you didn't need is probably gonna cost you to have it done anyway, so that goes in there too. But that's a great way so there's no big surprises.
Yeah, income tax started during the Civil War.
Yeah, it did, but it really got serious. They really got serious.
Yeah, and the new federal tax form just came out. It says it's only got 2 lines. It says, how much did you make
Yep.
last year? And then the second line says, send it to us.
Send it in, yeah. Yeah, yeah. I used to talk about the Polish tax return. How much did you make? What did you spend? What do you have left? Send it in. Yeah, I would say, yep. Yeah, that sometimes it feels like that, but it doesn't have to. So
Can you write off out-of-country virtual assistants?
sure,
Yeah.
yeah, they're employees.
Okay.
Yeah.
They don't have to be resident in the States.
No, it's an expense. It's a legitimate business expense. Yeah. they're not gonna give you a 1099 unless you go through an agency,
Right.
but, yeah, you can do that. Yeah, that's, if it's a business expense, you should be able to write it off, you know, if it's legitimate. I had a friend who, was very successful, he was an inventor, he was very successful, and, they traveled to London, and it was really close, unseasonably cold. And it was a business trip, and he bought his wife a mink coat, and he wrote it off, $7,000. He gets audited every year, but he can represent himself like a lawyer. He's just a genius like that. So he got away with it because it was a business trip and it was necessary, so that the wife didn't divorce
You
him.
mean a
The
world that worked?
It's the only one available in the store.
He got away with it. Yeah, there you go. The only code there. That could have been. So we all know that EVs, electric vehicles, there's only 14 models that you can do if you buy them this year that you can claim the credits for solar powered or electric vehicles. Just wanted to mention that.
Oh,
And they're all across the board. There's Teslas, but there's Toyotas and Fords and all that. Okay.
it's only
Can I
14.
go back to the board meeting thing?
Yeah.
Yeah, okay.
If you're having a board meeting, say if I have a board meeting in my house,
Mhm.
okay, and then the business, the corporation pays me $1,000 for having a
Every
board
time.
meeting. Okay, now I got $1,000.
14 times.
We don't have the money, but say we have a couple times a year. Now, how do I report that on my income tax?
You don't.
You don't need to.
It's tax free.
It's tax free?
Yes.
Sheesh. Okay, now, what kind of, it's red, you told me before. I'm just tripping on that. I never heard of that.
Yeah, I know.
That's a good one.
I'm trying to take
That's
the
a good
notes
one.
fast.
You can do it 14 times a year. So how do you have a board meeting if it's just you?
No, there's 3 of us.
Okay.
Yeah.
But if it's just you?
a
Take
corporate-
notes,
it's a corporation.
take notes,
No, I do.
because in case you
Yeah,
get
they have
audited.
So
how would
That's
you-
it.
that
That's
you
it.
have documentation that
do
on such and
minutes.
such a date
Yeah.
and such and such
Yep.
a time, these 3
Yep.
people met and we discussed the
Oh,
following.
no, I do minutes, resolutions, everything.
Yep, do
And then what I-
minutes.
what
You've
I
got,
miss, I
if
do,
you've got a corporation or an LLC, you've got that black binder, right?
Right.
There should be a section
Your
for your
minutes.
minutes, for your board meetings.
So even if you do it on Zoom, because I do that.
Okay, you can
Yeah.
still do minutes.
Yeah, no, I do,
Right.
because
Yeah.
that's how we kind of.
Right, here's who was present, and the date and the time and where it was online, and here's what we talked
Wow,
about,
I didn't know that,
and
yeah.
decisions you made, or things you were thinking about making, and then the next time, the decision that you made, and what happened, what you did, you wanted, so you should do that anyway, right? In your business, you should look at what happened last month,
Right.
what do we need to tweak, right? So document that thought process and call it a board meeting, and call it minutes and put it in your binder and write off that 1,000 every time. And you can do it 14 times a year.
And if you have a board meeting with just yourself,
Yep, yep.
because
You're
I've
the only
got
member.
younger brothers that just say, oh, you're in charge, you know what you're doing, we don't wanna have any, just send us a check.
Call them up and say, hey, I just made this decision. They were present.
Wait till they find out you got 1,000, we'll be there.
Yeah.
$1,000 deduction, baby. Yeah.
There you go.
Do
Yeah.
it 14 times. 14,000
Let them be
deduction.
present
Yeah.
one way or another. Email the minutes to them or whatever, that's a really good point, because I know that happens a lot. One person's doing it all and the others don't want to think about it, but they're signatories, if they're listed as officers, they need to know what's going on. So, unconventional medical expenses, new changes, you can write off CBD, and Asian medicine, I go to a naturopath. You used to have to kind of hide that, but you can count that now officially.
Right off THC.
Acupuncture,
Just the
Maybe not
CBD.
THC.
acupuncture.
Acupuncture, yeah,
Acupuncture.
massages,
Chiro-
anything, if it's
chiropractor.
for your health, if it's to improve your health, it counts.
Okay.
Just wanted to make sure you guys knew about that. Okay, more update, I told you about, okay, so now we can get into the filing requirement now. Every corporation, so we're gonna get into more of that, but I just this is this new law, it was effective January of this year. It affects every business in the country under 5 million a year, okay? So we'll get into some of that, and let's see, 30 days after yeah. So these are the requirements, but I have another slide that does that a little more. So what is next? Is it? Yeah, these are the things, the information that looks the same. Exempt is, there are exemptions, like I'm a sole prop, so I don't have to do it. So, but LLCs, that's what they're looking for. So the whole reason that they did that, you can go to the next, the whole reason that they put this law into effect is that they're trying to find the traffickers, right? The people that are doing stuff, and they have all these shell corporations. So if you're more than 25% owner, you have substantial control. They want to know who those people are for every company. And if it's a company that has other companies, you do the report for each company.
You're talking about
right?
statement of information?
What is it?
You're talking about the statement of information?
Yeah, the statement of information is with California, the state of California.
Yeah.
That if you're an LLC and you originated in an even year, then every other year on the even years you have to file with the state, even if it's just to say no change. It takes 10
And pay
minutes.
them the $20.
Yeah. But they don't do it for the revenue. They do it because they want to know. They want to. Well, of course they like having it, but they need to know if you're still in business. If they don't hear from you for 3 years, they don't tell you, but they call you suspended, and then you have to catch up and do all your reporting. It's better to do your reporting every year. So let's see.
It's only $20, yeah.
It's only $20. But it only takes 10 minutes online. It's really not a big
And
deal.
they'll forgive you the $20. They don't care about it anyhow.
They do though, especially California, they really do look. So I just wanted to mention one more time about documenting your expenses. You want to have, you want to show that you're trying to make money even if you're not, right? So your expenses, you want to always say the date, the location, the amount, of course, but what was it for? It was coffee to talk to a client. It was a meal for a big client. It was, whatever it was, you want to document that. If you do gifts at Christmas time to all your clients, that would be more advertising.
Okay.
Do you need to
'Cause I-
document
Yeah.
the names and
You're
subject?
supposed to, yeah, you're supposed to.
Even for coffee?
Yeah,
Yeah.
but that's why Hurdler's so great, because you can, at the end of the week or at the end of the day, you can say, yeah, that was coffee with so-and-so, and this was a meal for this person, and yeah, you wanna put that in there.
You can't deduct them.
Yeah, you can.
My accountant says you can't deduct business meals.
Business meals? Well, it used to be meals and entertainment, you can't write off entertainment, like golf fees.
No,
But
there's
I
no
put
golf
golf-
involved, it's just
I-
coffee or lunch or something.
Yeah.
That's a meal, yeah.
50%.
You can do half.
I think so. I
It's
think it's
50%.
You can do half.
You have a very conservative, probably older
extremely,
CPA.
yeah.
Yeah.
I'm older, but I'm not
Time to change.
conservative.
So during COVID, it was 100%, and so then
It
it
was.
was, so when did it go back to 50%?
In 22.
22.
Yeah, good point.
It was
Very
100%
knowledgeable.
what?
Yeah.
That you could write off?
Yes. Yeah.
It's 50% of your meals.
To save the restaurant.
And don't
industry.
inflate your meal number.
Say again?
That's because they do look
Yeah,
at
to
it.
save the restaurant industry.
But golf fees, like people give theater tickets to their clients. That's advertising, right? That's marketing. That's, hey, do business with me. Here's a gift, right?
I used to take a group of people from Rioch to the baseball game,
Mm-hmm.
and no deduction, they wouldn't let me deduct it.
What's the dollar
I
amount
think
on
we're
those
gonna make
gifts
a
or
change.
tickets or?
Oh,
cards?
it's okay. It's $25 per person
Per individual.
year.
For what?
For
Yes.
what?
The maximum
For
amount.
your gifts, if you like theater tickets. See, that's why theater tickets so favorable or popular. Because they're like $15, right?
So per
So
person per year.
$25 per person per year that you can give and write off.
So,
And what about Christmas,
Yeah.
holiday gifts?
Yeah,
That's in
25.
that?
But who's counting? Nobody keeps track of that.
I mean, we used to, with the company that I owned, we gave some pretty nice gifts to the clients. They wrote that all
But
off.
that's advertising. That's marketing.
It is.
That's advertising, so we could.
I mean, I have hot pads made, right? Real estate people make you know,
Knives.
tea towels and things like that, right?
Yeah, the
That's
Cutco
marketing.
knives and
That's marketing,
I
that's
do the
not
Cutco
gifts.
knives and stuff.
Yeah.
As we asked you guys here.
My mom always said, never give a
Jay.
knife,
Right.
because it causes division.
Right. Well, what, it's not the, it's not a knife. It's
Cutco's
the.
great though, I love it.
It's no. It's the like the spreader.
This, oh, okay.
Yeah, it's a spreader, but you can you can cut the sandwich with
There
it
you
as
go,
well.
yeah.
Yeah, it's
They have
really
a really
nice.
good
It comes from
avocado
Cutco. You know, they're like $80 each. So.
Oh my gosh, yeah, there you go, okay, next.
So could I just
All right.
ask a question?
Yeah.
Too bad you stepped out to cry all the deductions.
He's back, he's back, he's back.
There it is.
Now, on meals and entertainment.
Did you dry your tears?
Meals, when it's for yourself, I got my book.
Thank you.
It's like I just, to make it easy on myself, anything under $25, we put out meals, and then I pay taxes on that. I think I'm taking a shortcut, I don't know if I'm gonna be crying like you. And then anything over that, most of the time, I'm taking somebody out, cause that's how we network. We don't door knock, we don't cold call or anything. I work my center of influence, but it's a lot of, I
Yeah.
know a lot of people like my church and my
Sure.
So on those, that would.
I think
I
yeah.
take a deduction on that. It's
Here's-
not entertainment though.
I do what's called forensic accounting, okay? Most of my clients, when they first come to me, haven't done their taxes for more than 1 year, we'll say. Sometimes 10 years. They just didn't do it, and the IRS is after them, and it's like, I need it done now. Well, you waited 10 years, so you're gonna wait a little bit, right? So, so in forensic accounting, we take their bank transactions. Hopefully they don't have too many bank accounts for all those years, and we figure out what's deductible, what's not. So when I'm doing Stater Brothers and Burger King, all of it's food, but I have to ask them and kind of understand their spending patterns, right? I mean, if they had a realtor that was using, the kids were using her business debit card for pizza, right? So there's all this pizza on here. And she said, yeah, that's the kids. Okay, that's personal. That doesn't go anywhere on the business return.
Sounds like a client meeting to me.
She did buy pizza for her office a lot of times. So, so I would separate between personal, which would be groceries, or food, which is like you brought donuts to the office, or sub sandwiches for the office, right? That's 100%. And then coffee for yourself is 50%. So yeah, the best way to do that, that's how I do it too, 25 or 20, depending on where they are. But yeah, if it's more than that, you're gonna figure it's dinner out with a client. That's gonna be, you're actually writing off the client's half. And then when it's for yourself, it's half. So it's best if you can separate that as you go. So at the end of the year, you don't have to go, oh, I'll just draw this line, you know. But and that's why it's so great to have an app that you can say right now, this is what it was, and then later it gets all added up for you. You don't have to worry about it.
Joan, are you a CPA?
I am a certified registered tax preparer.
Okay, so.
I didn't go to the extra 4 years for the CPA.
Yeah,
And-
so you can prepare the tax returns?
That's all I do is taxes. I don't do books. I don't do what CPAs do. CPAs can do everything, and I don't.
You
So
don't figure out depreciation things and stuff like that?
I'll do depreciation because it's part of a tax return, yes, but I don't do cost segmentation. I don't
No,
do that.
no.
That's just too.
We're beyond that.
That's yeah.
Look at all the
Yeah.
experience she has.
I do have the, I'm studying now to take the test to be an enrolled agent. You have to have 5 years experience and a whole lot of knowledge, because an enrolled agent can represent the clients to IRS, like a tax attorney. And so you have a lot more access and you can do more, but I'm not officially an enrolled agent either. So I just do taxes.
I gotta look for a new accountant. I'm not looking for cheaper, I'm looking for better.
Better.
Yeah.
Good, that's smart. That's very smart. Yeah. I can't do cost segmentation, but
No,
if, yeah, that's
our
been
center
done.
is beyond that.
Yeah, when you have a lot of property, that's usually something that's helpful. I also don't do like the employee retention credits, that
You're
extra
looking
stuff.
at the only employee.
Yeah, yeah. I'd be happy to look at your records, you know. If I look at the last 2 years, I tell people I can read a tax return like a storybook, right? So they bring me their 2 years and I'm go, oh, you did this and this. How'd you know that? And it's right here, right? So, you know, I could sit down
You
and
can
look at,
generate K-1s?
oh yeah, yeah. I do taxes for corporations, estates, trusts,
Yeah, I looked for your card, I
all of
didn't see it.
those.
so-
I have cards.
Yes.
I have cards.
Get them in card.
Do them and a card.
Yeah.
There you
God,
go.
he needs it before
Happy
he
to
starts
do that,
crying.
Liv. We talked a little bit before, and I would love to.
I'm taking one.
Sit
You
down
wanna
and
go to
look
the
at
next
your-
one?
yeah. Everybody knows to save for their retirement. You can put away up to $7,000 a year if you're over 55, and it's $6,000 a year if you're not doing the catch-up plan. And you can pay your spouse's salary, and that's tax deductible, just like paying an employee, but that way it keeps the money in the family, so that's always a good tax strategy, and they'll pay less than you will on that income, right? You're using profit to pay the spouse, and the spouse gets a W-2, and they're gonna get their lower tax bracket than if you're doing really well in your company, right? Yeah, the highest tax rate for corporations is 22%, and that's not what human beings are paying. The individuals are paying 10%, 10 or 12. So it really cuts your taxes. Okay, filing deadlines. We all know January 31, W-2s and 1099s are supposed to be sent out.
Supposed to be.
Supposed to be.
Yeah.
Still get
Yeah.
them in March.
Yeah, well, 1099B from your broker is March 15. So, not March 15, February 15. February 15, yeah. Yeah, you know, if the IRS notices, they will penalize the company for not sending them out when they should. They're just glad that it gets sent out though. So, I brought a handout that can be used like a checklist when you're sitting down, getting ready for your appointment with your tax preparer. Anything that your tax preparer might ask you for is on there. So I hate it when they come and they bring a W-2 and then, oh, by the way, I have this. Okay, well, you're gonna have to come back. So, and on my business card is my website, and on the website you can also download this, and you can also click where it says send a file, and you can put PDFs into a secure portal of your own with your own password, and you can send things in that way. It's so much easier on everybody. You don't have to drive to the office. You just send it. I can look at it at midnight when I'm looking at things, and it's just easier for everybody. So
You're in the same suite as
got that set up.
Alfonso?
I have the same address, yes. We're in Regis.
It says 1250, and
Yeah.
his is 1250.
Yeah, it's half of the 12th floor in our building. It's Regis. They're like executive suites.
Yeah.
Oh, I see.
Yeah, so the mail all comes to the front desk and she brings it to us in our offices. We each have our own office. Yeah. There's something like 54 offices there. It's all different sizes. Lots of different people, lawyers and all kinds of fun. We just had a big potluck yesterday. It was a lot of fun.
I have a question about the spouse.
Yeah.
The payment to the spouse can't be a business partner, or can they?
What kind of business?
So
I'm sorry, the structure. Is it LLC, S Corp? C Corp?
LLC,
LLC.
and then S Corp, but I think it's holdings.
Okay, so S Corps, they started requiring that S Corps pay their key members a salary. So you're supposed to be paying yourself a salary anyway, and it should be reasonable. So let's say your profit for your LLC is $80,000, and if you worked for a company, your salary would be $50,000. You should be paying yourself a salary. And there's payroll services that will do that when it's just one W-2, you know, for less than they would charge a company that had lots of employees. So you're supposed to pay yourself a salary. If you are marginal or in the red, of course, you're not gonna pay yourself a salary. That's just moving money around for no reason. But if you have an S Corp and you're both members of the S Corp, but when you are spouses, it's still considered a single member LLC. So yes, you can pay the salary to the partner, the spouse, and you're gonna file jointly anyway, so your profit, you're gonna pay self-employed income tax on the profit after those salaries are paid, so it's better to pay the salary.
Okay.
Okay?
I'll call you so we don't.
I know,
Yeah,
it's,
I will
it's-
call.
everybody's got their situation, and the dollars, you know, if you've got extra zeros, it changes how you do things, yeah.
My mom passed away in 2000, and so we were using
Sorry.
her trust as the umbrella for the shopping center. And then when I did my own trust in the early, I guess it was 2010s, they said, we need to see your mother's trust to see how it works into your trust. And they said to us, your mother's trust doesn't exist. It was supposed to be, you were supposed to distribute all the assets, and it was supposed to be
I was gonna
over
say,
at
you
the
moved
time-
it over to
at
yours,
time-
right?
At the time she passed away.
Yeah.
And we said, how can we do that? It's a shopping center, and there's 4 brothers involved. And we didn't want to sell the shopping center because the tax implication.
Right.
So we've just kept the trust as the umbrella. Well, it doesn't exist, so we formed an LLC. They made me the
Yeah.
manager, because the brothers said, you know, we don't want to be involved in this.
Just send us a check.
Just send us a check. And the attorney way back when we had the trust said, you know, you gotta pay yourself at least once a year for managing the trust.
Yep.
Because that's over and above
Yep.
what you're doing
What you
as
do,
far
right,
as property management.
right, yes.
And I think that exists now with the LLC, because I'm the manager of the LLC. So that, am I still able to pay myself a management fee for managing
oh,
the
yeah.
LLC?
Yep.
Okay.
And you should have a salary too.
No, because
For
I'm a
being-
sole proprietorship in my property management, and it's separate from the LLC.
So
I-
the LLC is paying your property management for property management.
Correct.
But you're still running the LLC.
And I'm running the LLC.
You're 25%, but you're running it.
Correct.
So
Managing it.
you should have a salary for running the LLC,
So
not just
like,
running the property.
Instead of, I mean,
Yeah.
once a year, I usually get a check for something like $5,200. I figure like $100 a week is adequate. Is that, am I gonna have any
It's not an
problem?
S corp. It can't. It's not an S corp,
I don't
right?
believe so.
Okay. So it's not an S corp. So you don't have to pay yourself a salary, but you could. It goes back to paying as little taxes as possible, right? So the LLC
But I
has
have to declare it as income.
yes.
Okay.
But income on a W-2 is taxed at your ordinary income rate, which is gonna be 10 to 12%, versus the self-employed income, which is from your K-1, which goes on Schedule E, and that's 15%. So there's a little save. 5,200 is not gonna make much difference.
Okay.
But that's, you know, it's a strategy to reduce your taxes. That's all I'm saying.
Is there a standard, like in this case, managing a
Reasonable.
trust or family trust, even if you are one of the beneficiaries of that trust, is there a standard or acceptable amount that you charge? Some people, like he's choosing not to basically charge
Yeah.
the family trust much, but what is an acceptable or allowable amount to charge as a manager?
When it's family, you can get away with a little less, but what the IRS would say, which is, you know, kind of my job, right? My job as a preparer is to represent you to the IRS in their language, but I'm really representing you, right? I work for you. So to answer that question, what the IRS would say is reasonable. So a property manager salary, whatever that would be in this market, that's the amount that you should be charging to doing that. Yeah. If you're a doctor and you're running a clinic and you're the owner of the clinic, it should be a corporation. Definitely would be a corporation because it's easier to insure it as a doctor. But you would pay yourself a doctor's salary, whatever that kind of doctor would earn working somewhere else. They want to see reasonable for your market. I kind of muddied the water, didn't it? Sorry.
You mentioned that S Corp doesn't have to pay salaries. How about a C Corp? Do they have to pay salaries?
Yeah, no, they don't have to, but most corps do. Most C Corps do. They pay the CEO at least.
And the S Corp?
S Corp's required by law.
To pay salary?
Yes. From the profits. So if you're not profitable, you don't have to worry about it. So what I say is, if your revenue is $50,000 a year and up, then we'll figure out a salary and we'll go through a payroll service and the whole bit. And you can do it once a year. You know, you don't have to figure it out and do it every week or whatever. You can say at the end of the year, here's what our profit was. And ADP, I have a ADP rep that we can call her like December 1st and say, here's what this salary is going to be for the year for this person, and they'll make you pay it, to your bank account, but they'll do all the reporting and they'll give you the W-2 and all that. So it makes it reduces your taxes because you're going to pay it as ordinary income instead of self-employed income, unless you have a whole lot of income from other places and your tax bracket goes up.
So I travel and work internationally 4 or 5 months a year, and I stay with people rather than get a hotel, and I buy them groceries and that type of stuff as payment for the space. Or is that expensible or not? Or?
The transportation would be deductible,
Yeah.
but if you're not paying to stay there, that's
But,
not.
well, how about for the food and stuff?
Yeah, meals.
Well, it's not meals. Like, I mean,
Went to the store. Yeah, I've done that.
£100
You
worth of
go and
groceries,
stay
so-
with a friend and you buy a week's worth of groceries because you're gonna stay there for a week. Yeah.
It just might be better just to say, hey, I'm paying you this much, just use it for groceries, but I'm paying you this much as like an Airbnb type of
Right.
thing.
Yeah. I would
And then
do
that
I
would be more deductible?
Document it that way as rent or room expense.
Room and board.
Yeah.
Like a room and board, right?
Yeah. That would be the way to do that.
Because I do that as well
Yeah,
sometimes.
just don't call it meals because, yeah, they don't, it's funny, you're gonna eat whether you're traveling or not.
Right.
But meals traveling is not deductible, but I still, whatever you spent for meals for the year, I don't care if you were traveling or not.
Well, when you say meals traveling aren't deductible, that doesn't make any sense.
Well, they just don't
because
want-
say if you're in Paris, you gotta eat.
Right,
So you
they
can't
just
write
don't
off
want
your
you to
meals.
call it meals while traveling, right? They don't want you to put it in your travel expenses.
Just call it business meals.
But it goes in the meals category separate from travel.
Could it be a per diem?
Per diem is more for overnight stays. Truck drivers use per diem, right? They
I
sleep
use
in their
per diem.
cab.
I use per diem. I'm going up to
Perfect.
inspect the shopping center in Royal Brandy, which is Pismo Beach, on
Right,
Saturday.
right.
And I put my breakfast on credit card, and my lunch on the credit card. I put the refill of gas on my credit card. I put my dinner on the credit card.
Yeah.
Because I used to work for the state, and it was all per diem. And
Right.
so I've just carried it over, and the accountant is fine with it.
Yeah, you can do per diem that way.
Is there a set
Truck
limit?
drivers, they have sleeper cabs and they sleep in their cabs, so they didn't pay a hotel room,
Right.
but they write off that per diem. But it's by county, so it's tough to do taxes for truck drivers if they're over the road and they go into all these different states.
Or counties.
Then you get, then you gotta figure out, okay, where do you usually stop? Like if it's always Tulsa, then we'll take that county, you know, for so many trips, that kind of thing. Yeah, you know, you get into the weeds sometimes, it's crazy. Okay, really want to get to the BOI, because that's really important. There it is, okay. So, beneficial ownership information report. This was effective January of this year, and all businesses are required to file it one time. Doesn't cost anything, takes 10 minutes. I have the 4-page form here printed out. I made it kind of small, but I think you'll be able to see what, just so you can get an idea. The information's very.
Was that the Finca thing?
FinCEN, right,
FinCEN?
right,
Yeah, you sent
FinCEN.
it to me and I did it.
You did it already,
It's
right?
done.
Took what, 10 minutes?
Yeah.
So now
It's
we all
not
have to
hard.
do this now?
Every business, let's look at the thing. So it was a Financial Crimes Enforcement Network,
don't think you
FinCEN. It's effective this year. The purpose is
That's
to
what
look
that is.
for the bad guys.
Traffickers
Right,
and-
right, trafficking of whatever kinds. And if you are, let's see, if you change your situation, you have to update within 30 days, send a new form. But if there's no change, you only really have to do it one time. And it's different from, you were asking about the statement of information, that's with the state. So
Right.
when you form a company in California, you file it with the California Secretary of State. That's
Yeah,
what
yeah.
makes it
SOS, yeah.
official. And then you have to do that statement of information. Corporations are every year, LLCs are every other year, even or odd, whichever. from-
Yeah, because I do it every year, 'cause I'm a
Right. You can do it every year if you want voluntarily, but, you know, they don't require that. If you don't do it for 3 years and you don't file taxes, Franchise Tax Board will tell the Secretary of State, SOS, we call it, and they'll suspend you. So you don't want to be suspended. You want to always be in good standing. And you can look yourself up, and I have the link. It'll be in the PDF here. You just go to California Secretary of State and business search and look up your business and make sure you're in good standing.
sos.ca.gov.
Perfect. Yes,
Right.
that's right. Very
Yeah.
good. You know how to do this.
I was with the state for 18 and a
You
half
did.
years,
What
yes.
did you do with the state? Is that what you did?
I was an environmental policeman.
Okay.
Oh,
Whoa.
EPA type of.
Oh my.
Still have the badge.
I can tell oh my gosh, that's so cool. That's a good field to be in, for sure. Oh my gosh, you still do, oh
Oh
wow.
wow, yeah, she does.
You can do that, you can keep the badge
And
when you
when
retire.
he wanted it back, I said after 18 and a half years, take a flying fig.
I love it, I love it.
Like
That's
it,
worked
like
real
it.
well in Thailand for them too.
And driving the new Corvette home from Atlantic City, it worked also.
Oh, nice.
You just kind of go.
I got pulled over in Georgia.
And you just
Oh
like-
Lord.
All right, just keep it down.
Yeah, oh, that's good. Oh, I could tell some stories. Okay, so yeah, next one. So this is the requirement, and let's see, I think I already said all this. And so, you're gonna report owners of 25% or more. And everybody needs to file. There are some exceptions. So if you're a security company, a utility company, insurance, all these exceptions, there are very stiff penalties for not filing. So you want to know your due date and make sure you file by your due date, or else it's $500 a day for
Okay,
not filing.
I missed that because I had a really important
Okay.
text. When is this due by?
This is, well, that depends on your company. Let's do the next slide. Depends on,
Good to the.
I'm a
let's
corporation.
do the next one. Yeah, we talked about why, who must file, we got that. If you have less than 21 employees or less than 5 million in sales every year, then you have to file, except for these exceptions, okay? Next one. So, the time of filing, let's see.
If you didn't
Next.
form your LLC this year, you had to file and you formed it before.
Here's your
you have to the end
deadlines.
of the year.
Here's your deadlines. If you were in existence before January 1, you have all year
Right.
this year to file. It takes 10 minutes, just do it and not have to worry about it. If you started your company this year, you have to file this within 90 days.
Right.
And if you, after January, it's gonna be 30 days. Because I guess they figure by then everyone's gonna know, and whoever helps them form it, the company is gonna tell them you gotta do this.
30
right?
days from the anniversary date?
From the date of origination.
If you file next year,
Supposed to send
if
me
you
this.
form next year.
Yeah, who's,
You just have to know about it as a business
Well,
owner. That's why I'm
really?
making you aware of
It's
it.
an IRS report, and
Yeah.
yeah, I never even heard of it.
Right.
They should make it more public.
It's not really the IRS,
It's not
it's
that difficult.
FinCEN,
It's
right?
not
It's-
difficult to fill out, but I'm wondering like,
Right.
if I got a notice, you know.
Well, that's why I'm bringing it up, because,
There's no
because business owners don't know about it. You
Yeah,
know, I mean,
yeah.
I get a bulletin from FinCEN every day saying, you know, we told this many more people and that kind of thing. So they're trying to get the word out, but I just figure all of my clients, because most of my clients are business owners, they need to know about it, so I'm telling everybody.
Thank you.
Yeah, you're welcome. So there's your dates.
Online, where is it at?
Yeah, it is online. I couldn't print the link on this form,
Okay.
but I do have it for you. So your penalties are $500 a day,
Holy crap, really?
and there's your form. Here's your link. It's fincen.gov,
Oh,
real easy.
fincen.gov.
FINCEN.gov. And they've got videos, they've got how to do, they've got click here to file, takes 10 minutes.
It's just easy.
Really
Joan
not a
sent me
big
the
deal.
link and it was
But if
just-
you have layers and layers and layers, you've got LLCs that report to LLCs, and it's gonna take
They're
longer.
looking for shell companies.
Yeah, they're just looking for people who are trying to hide.
I've heard of this because of that
Part of
in
the
the
Treasury
laundry,
Department.
but I didn't,
Well, they'll be happy to
Department
collect
of
the
Treasury.
funds. But, we don't want anybody to pay that penalty, so.
And DBAs don't have to file.
DBAs do not, and sole proprietors do not,
Okay.
right? And
But
accountants do
LLCs, of
not.
course.
LLCs and corps, right? And an S corp is just another kind of a LLC, right? Any more questions? You guys asked a lot of really good questions, and it was really fun doing this for you. I'm glad that we could talk about this today. And please tell your friends. And you've got my information, my card. Please tell your friends. Everybody who's a business owner needs to know about it. And I can't do it for you. It's, my lawyer said don't, because whoever files the information is responsible. So if the information changes and that person didn't file the change, they can be responsible. So
I'll be calling you to make it.
Yes, yes,
Yeah.
yeah.
Thank you, that's good. Great.
Good.
Any other questions? Thank you very much for letting me do this today. Awesome. I don't know how long I was, but.